Good morning, friends. From sharestrading.school.com, I once again welcome you for Nifty analysis. Today, 18th March 2016. As per monthly chart, if you remember, being the last day of this week, I would like to spend some time on analyzing on broader level of this Nifty. As per monthly chart, if you remember in the beginning of the month, we said that Nifty will be trading within this range of 50 moving average and 20 moving average. And this channel, which it is forming actually accumulation phase. So there are two reasons why Nifty is accumulating. Because first of all, it is trapped in the channel and even trapped in the moving average. Those are crucial moving average, 20 and 50 EMA. So long-term phase for Nifty is consolidation, and unless Nifty crosses this 20 moving average, which is placed at around 7,745, so we will say, so to be precise, 7,750. Going long would be difficult for this market, and their bulls will really find tough time, need real good fundamental reasons to cross 7,750 level, and hence this consolidation has become very intense, and day after day we are finding it very difficult for Nifty to cross few levels. Now I have placed a daily chart in front of you. We are not plotting any indicator at this moment. We don't need any indicators to analyze. Actually, if you see as per the only price charts, in front of you we have a candlestick formation of a daily chart, and practically we can very well see that there is quite a good accumulation, because day after day price is not forming higher high, higher low on daily basis. Some day it forms higher high, another day it forms lower low, or some day it forms inside days. So there is nothing specific chart formation. Whereas if you see this formation, which generally called as a hammer formation, but it is not a clear hammer formation. We can call this as a hammer formation, but calling this as a hammer would be quite difficult, because hammer formation, when we call, for that time shadow has to be double than the body. Unfortunately, this shadow is almost same as that of a body. Secondly, for hammer formation, previous trend doesn't matter, at least 3 days or 3 bars should be forming lower highs and lower lows, and then it forms, then it can be called as a hammer. Unfortunately, last 4-5 bars, if you see, it is not at all a trending, it's a consolidation market. So technically, as per any candlestick pattern formation, if it takes place in this range, we should not take it as, or we should not consider those patterns, because in accumulation phase these patterns will not work. Now we need a swing highs and swing lows. Actually, if you see in this phase, which is a prior phase, we can very well see that this is a trend, because this high and this high, if you compare, which is a swing high, so this swing high is lower than the previous high, this swing low is lower than the swing low. So we can say that till this phase there was a very good downtrend, and this trend has changed. But unfortunately, when trend has changed and this trend line breached, that time it should form as a swing highs and swing lows. This is a last swing low as far as reversal is concerned, but after that we have not formed any swing low which should be higher than the previous low. So we are waiting for that, and that formation is not taking place, and hence Nifty is not giving you a proper trend. Now to show a good trend, we need to bridge this trend line, which is I have shown in a red color. If it breaches a north, then we will see a resistance at this blue trend line, which is a long-term trend line. So short-term trend line is breached, but we are testing the resistance at the mid-term trend line. And if mid-term trend line breached, then we will see a resistance at long-term trend line, which would be again placed at 7,700 level. This 7,700 level is very crucial level as per our monthly chart formation, because there we will see a resistance at of 20 moving average and channels upper trend line. So 7,700 would be a next resistance, but honestly, crossing 7,600 level or 7,550 by itself is very difficult, because we have tested a support at this level once, support twice. This level, which has acted as a support, has been converted into the resistance. So whole reversal is also checked at that level, and three times we have tested a resistance, and same line, same level, 7,550 level is finding it very difficult to cross and close. Twice we have breached that level. Nifty had created a high, formed a high at 83 on 14th March, and again formed yesterday a new high 85, just marginally 2 point, but failed to close beyond that 7,550 level. So till now we have not closed above 7,550 level. So for us, that is a very crucial level. So Nifty, unless it closes beyond 7,500, and to be betterly, if I'll put, if should it should close beyond 7,600, that would be much more comfortable margin, and only then we should think that Nifty or bulls has taken a charge and midterm trend has been converted in the bullish form, and will taste a resistance at 7,700 or 7,750. So as per this formation, we see the Nifty is forming probably a head and shoulder, inverted head and shoulder, which I talked about in last previous reports. So this would be shoulder, this would be head, and probably we are forming the shoulder again here. So let's see what happens unless that formation is taken place, unless Nifty reaches 7,600 level and close beyond that. Going long or talking about bullish trend is difficult for us. So we will see this is a wait and watch situation. Now to form an intraday trading strategy, as per daily chart, we have been tracking. So 100 moving average is placed at 7,500 and 7,600 level, and 7,400 level. Around that level, we could see that there is a 50 and 20 moving average. So naturally, we are trapped as per moving average also in daily chart. So how to design a strategy to trade? So for that, if I convert this into hourly or half an hourly chart, then in half an hourly chart, if I plotted a Fibonacci retracement level of last swing low, which was 2 days prior, around 1 o'clock, we have seen a very good swing. So that I have taken a support or swing low, that is 7,405, and this high which Nifty had created yesterday, 7,585, and since that it started coming down. So if you take this as a current swing, then we can see that Nifty has a very good support at 7,473. So this level is a very good level for support as well as half an hourly chart. So what I would suggest is wait and watch for first half an hour. See what happens. If Nifty creates a first half an hour bar, a bullish bar, actually what happens, most of the time nowadays it happens that it opens with a gap and it fills that gap. Yesterday also it has opened with a gap and it filled that gap. So it may happen anywhere. It can open around 50 EMA, which is placed at around 7,500 level. But it is important that whether it sustain at that level. So if Nifty crosses first half an hour high, then we will go long. And in that case, probably it could be around 7,500. We should keep a stop loss below 7,450, which is a very crucial level. So below 7,450, we will keep stop loss. This stop loss is not for positional trader. This stop loss is only for intraday trader. Because in intraday, if you see an hourly chart, there in hourly chart, we could see 100 moving average is above 7,405 level. So this is a very good stop loss for a positional trader. But for intraday trader, this should be a good stop loss. And then we will go long, and then we will keep a first target around 7,516, second target 7,542, And third target, certainly this is not a swing high, but before that we have seen a price accumulation. So third target is 7,564. So my strategy is quite clear. First half an hour bar we will see, and if first half an hour's by high breach north, then we will go long for these targets which is plotted in front of you, and we will book profit partially on that level. So best of luck and happy trading.